failure.
While rates moving higher, stock markets lower. That's Jamie Dimon. Global agencies continue to downgrade growth forecasts for the world and India. Latest is the International Monetary Fund. It's cut its FY23 growth forecast for India by 60 basis points to 6.8%. This is lower than the RBI projection of 7% growth. But India remains the fastest growing major economy. Ritu joins me now with the highlights. Ritu, take us through what the IMF is saying.
The big takeaway from IMF's latest report is that a third of the world economy will likely contract this year or the next, and IMF warns that the worst is yet to come, and for many people, 2023 will feel like a recession. Let me begin with India's outlook, where the growth forecast has been cut steeply to 6.8% for FY23, lower than RBI's projection of 7% for the year. IMF says this downgrade reflects a weaker than expected outturn in the second quarter and a more subdued external demand environment. India's growth is then seen slowing down to 6.1% in FY24 and at 6.2% over the medium term. Inflation is seen averaging 6.9% in the current fiscal and 5.1% in the next, and the current account deficit is seen at 3.5% for FY23 and 2.9% of the GDP the year after. Now, while the global growth forecast for this year is left unchanged at 3.2%, next year's forecast is cut by 20 basis points to 2.7%. IMF says the 2023 slowdown is going to be broad-based, and this weak growth reflects significant slowdowns for the world's largest economies, that is the US, China and the Euro area. For 143 economies constituting 92% of the world GDP, the outlook is significantly weaker than earlier estimated. This growth outlook is the weakest, in fact, since the 2.5% growth rate seen during the global slowdown of 2001, with the exception of the global financial and COVID-19 crisis years. Now, IMF also says that inflation is now expected to peak at 9.5% this year before it slows to 4.1% by 2024, and it warns that it remains the most immediate threat to the current and future prosperity of the world. So far, IMF says the dollar appreciation appears mostly driven by fundamental forces, but this sharp appreciation adds significantly to domestic price pressures and the cost of living crisis for emerging economies, which are already facing challenges. There are multiple risks it highlights to this outlook. Most importantly, that monetary policy could miscalculate the right stance to reduce inflation. More energy and food price shocks might cause inflation to persist for longer than expected. Halting gas supplies by Russia could depress output in Europe, and so on.
The 2023 slowdown will be broad-based, with countries accounting for a third of the global economy expected to contract this year or next. The three largest economies, the United States, China, and the Euro area, will continue to stall. In short, the worst is yet to come, and for many people, 2023 will feel like a recession.
The worst is yet to come.